People in the XRP army pay close attention because what just happened in the financial system will have a huge impact on the whole crypto market. There are real-time flows of billions of dollars in and out of the markets, the Federal Reserve surprising investors with new news, and XRP, Bitcoin, and Ethereum shaking like never before because of the huge volatility. I'm going to show you why XRP is about to enter one of the most explosive windows we've seen in years. It ties together the Fed's choices and Wall Street's actions. This is not advice about money. As of yesterday, you could see it if you paid attention to the charts. The value of assets is going up and down like a roller coaster. XRP fell to a range of 0.25 to 0.26. Bitcoin went up and down as $22 billion worth of Bitcoin and Ethereum options ended today alone. That date of expiration means one thing. People are putting money back into the market, and the game of who wins and loses has just begun. Volatility goes through the roof every time one of these dates comes up. Of course, it's not just up or down right now. It's all about when. The market is already moving, so small sellers don't need to wait. The institutions already know where they stand. And since we're talking about placement, this is interesting. Over $157 billion has been raised by tech companies in the U.S. through the public bond market just this year. That's the most so far this year since 2020. Take a look at that. In 2020, tech loans went through the roof. What did that lead to? During the 2021 bull run, Bitcoin, Ethereum, and XRP all reached their highest points ever. There's no chance in this. When businesses borrow a lot of money, they put it into AI, blockchain, infrastructure, and other projects that will give them huge returns. Where do those gains go? Going back to stocks and coins, the things we're looking at right now. The Federal Reserve is fully in liquidity push mode. Their best measure of inflation, PCE, came in at 2.7% in August. Core PCE went up by 2.9%. Both were right about what to expect, but there's a catch. Rates are still going down because of the Fed. That means everything you buy, from food to rent, costs more. The dollar is also losing value, which forces people to find investments that will actually hold their value. For many, that means cash and stocks. The numbers also tell the truth. The last 12 months were some of the worst in the history of the US dollar. It's still moving down. 2 more rate cuts are likely before the end of the year, the Fed said. 2 more. That means more money is coming into the system looking for a safe place to stay, and buyers are under more pressure to buy assets like XRP, but most people miss this part. Most of the time, the crowd is wrong. Professional buyers, both individuals and hedge funds, sold $3.8 billion worth of U.S. stocks last week. $1.44 billion was sold by institutions. It was a net loss of $2 billion for hedge funds. Another $300 million was dumped by individual buyers, making it 3 weeks in a row of selling. Most people believe this is the best. They think that when the Fed lowers interest rates, the rise is over, and it's time to get their money back. But history shows that this is not true. When the Fed cut rates, while the S&P was close to all-time highs, the market went up the next year 20 times out of 20 times. That's a 100% success rate. Every time stocks go up and crypto goes up. That's because the new money doesn't come into the system for months. Money that the Fed puts in doesn't show up the next morning. Over the next 3 to 6 months, it will spread from banks to companies and then to asset markets. We are at the start of that cycle right now. This is the most sneaky thing that emotion does. A lot of people are negative. They have already sold too much. But the numbers show that smart institutional money is on the verge of buying. While retail panic sells, their average spending over the last 4 weeks has been going up. When smart buyers step in while most people run for the exit, that's a sign that the biggest moves are still to come. Finally, what does that mean for XRP? First, yes, support levels might be tested again in the short run. We've got a line around 0.256 right now. Maybe we should test that again before we bounce. That is good for you. Markets have air, but when you look at the bigger picture, those retests are chances, just like when XRP hit $0.2720 earlier this month and then bounced back to $0.281. Those who hold that level are sitting nicely right now. The important thing is to not let short-term changes scare you. It's not bad to have volatility. It's the fuel. It's what moves money from people who don't want to wait to people who are willing to wait. And being patient pays off hugely when money is coming into the system like it is right now. Think about what tech borrowing means, what Fed cuts mean, and what buying by institutions versus selling by individuals tells us. They are all flashing the same light. We are now getting ready for the next step higher. It's not a straight line, it means a loop with chances, shakeouts, and retests. And this is where XRP is different from most other things. There is more to XRP than just speculation. There is a global discussion going on about payments, cross-border settlement, and how to add digital assets to banking systems. When there is a lot of cash on hand and the dollar is losing value, everyone looks for options that are quick, easy, and scalable. XRP has already been used in that way in the real world. When you add in the instability, today could be the start of tomorrow's highs. For a moment, let me connect this to the Fed, since that's where it all began. When they lower interest rates, the markets respond. Okay, here's the timeline. We'll really start to see the difference in 3 months. When 6 months have passed, the flow will be clear. If past trends hold true, we'll be at better levels for both stocks and crypto in 12 months. That's not what I think. That information comes from 20 years of rate cuts. And don't forget what happened after 2020's huge debt. We were not just looking at new highs by the time 2021 came around. It looked like record highs. Things like Bitcoin, Ethereum, and XRP all went through the roof. It's the same setup again. A rise in borrowing, an influx of cash, a weak dollar, and establishment accumulation. Time is the only thing that is missing. Because of this, smart investors are getting ready for the medium-term wave while everyone else is freaking out about short-term drops. That wave that doesn't just check the amount of resistance, it breaks it. In that area, most people don't notice anything at all. They are worrying about a red hour or a dip to support while looking at the daily candles. The real story is being written months ahead of time. The Fed has already told us what's going to happen. There is still liquidity after all this time. It needs to go somewhere. Right now, it's going to institutions that are getting ready for the run that retail is too scared to make it through. The numbers don't lie, so let's look at them again. On average, over the last 4 weeks, institutions have become net biased while retail dumps. With the most research, the best knowledge, and the longest time horizon, this means that the money is coming in at the same time that the public is leaving. It's not often that those two things differ. It's a sign when it does. That's because in the past, it's been one of the best signs for making money. We've seen this before. Think back to 2018, the year that Bitcoin fell after the blow-off top. A lot of people left retail. People swore they'd never touch Bitcoin or XRP again after reading about the crypto winter in the news. But who bought things at that time? The same institutions, funds, and experts who helped Bitcoin go from less than $4,000 to almost $70,000 later on. When fear reached its peak at the start of the world pandemic in 2020, the same thing happened again. Stores left. Institutions were full. After a few months, the market was in full bull mode. That loop keeps going. The macro factors are even more in sync this time, though. The Federal Reserve is lowering rates. The rate of inflation is still very high. There has never been a time when the dollar lost value so quickly. Tech borrowing is through the roof. There is more money than ever being put into AI and blockchain. It's not just set. It almost begs to know what comes next. Let's look more closely at what XRP has to do with this. Because unlike 2021, XRP isn't just waiting for money to come in from speculation. This time, it's at the heart of making rules clear, getting institutions to use it, and making it useful in the real world. Ripple's network has grown a lot, and now there are cross-border settlement pilots happening on 6 countries. Banks and other financial companies no longer wonder if blockchain will be used. What blockchain do they want, and when do they want it? It's also one of the few assets that has the speed, low cost, and track record to meet that demand. Here's what makes this moment special. Institutions are looking at XRP as infrastructure, while most small buyers just see it as another token. Look at it through a totally different view. Infrastructure isn't about making a fuss. It has to do with need. Finally, XRP is a great solution for a need that exists because the dollar is losing its power and global payment systems need new ways to settle transactions. But let's not forget about the short-term technicals. They are important for time. The latest support levels for XRP, which are around 0.256, have held many times. Supports get stronger as they hold more weight. It's possible, even likely, that there will be a retest, especially since option expirations add instability. But look at the good things. Once momentum changes, the next resistance levels, which are around 0.29 and 0.32, are easy to hit. If a lot of XRP goes through those levels, The next goals are 0.36, 0.42, and even higher. Every one of those levels is connected to an earlier consolidation zone, and breaking them creates an effect that looks like stairs. As always, Bitcoin is in the lead of the global flow, and it just took in a $22 billion options expiration. In the past, volatility has spiked in both ways after big expirations before a clear trend emerged. That's why the next few weeks are so important. They shake out weak hands, not because they decide the whole bull run. The way XRP responds to changes in Bitcoin shows us where buyers are waiting. XRP has room to grow if Bitcoin stabilizes, even if it's just staying above $62,000. Now, get a bigger view. What the Fed does affects more than just crypto. Global risk assets are affected by them. Credit moves when rates are lowered, business borrow more, investors want to make more money. When bonds get weaker, stocks get stronger, and crypto becomes the high-risk play. That's why tech companies have borrowed $157 billion so far this year. Money is once again cheap. Right now, things are the same as they were before the 2021 bull run, and crypto is once again the winner. Now, though, things are different. How blockchain is being used in everyday processes. When I was in school in 2020 and 2021, businesses were just beginning to work with crypto. These days, they're building whole systems around it. Cross-border settlement systems, custody solutions, and ETFs. These are no longer just guesses, they are working. XRP is being tested for use in cross-border payments and added to multi-asset funds. These steps work in the real world. That's why the moment of instability is a chance. People who know where this is going will be able to get in at the right time during every dip, check, and panic sale. There are no green lights being chased by institutions. They're slowly building up during red ones. They're not looking at how people feel on Twitter. They are keeping an eye on bond markets, Fed policy, and the flow of money. It gets even more interesting on the bond market. As the Fed lowers interest rates, yields go down. This means that keeping crypto has less of an opportunity cost. People who normally put their money in bonds to be safe are now seeing smaller returns on those investments. That makes them want to invest in stocks and crypto, assets that can earn bigger multiples and grow faster than inflation. This means that money from the bond market is going straight into assets like XRP. Now think about adoption around the world. The US dollar is not as strong as it used to be as the world's main currency. Alternative ways to settle disputes are becoming more popular. CBDCs are being looked at by central banks. What do all of those projects need? A valuable bridge. Something that can link different currencies, settle right away, and do a lot of them at once. XRP is one of the few options that could fill that job. That's not just a guess. Now it's being tried out in pilots. The best part is now here. A lot of people won't notice it until it's too late. Institutions will have already packed their bags by the time the news reports that XRP has reached new highs. When regular people figure out that the Fed's cuts are good for the market, the big moves will already be underway. That's how it works. And the people who see it first, who find the links, are the ones who will gain the most. Let's make the links clear. $22 billion worth of options just ended, bringing in cash. $157 billion in tech loans are boosting innovation, just like they did before the bull run in 2021. Even though inflation is going up, the Fed is dropping rates, which makes the dollar weaker. Institutions buy more than they sell, while stores sell more than they buy. Both technical help and real-world use of XRP are going in the same direction. When you put those things together, you can't miss the picture. There is no chance in volatility. It shows that capital is moving from weak hands to strong hands, from households in fear to businesses getting ready. Don't forget the due date either. The full effects of today's rate cuts won't show up for months. That means that this push for cash won't really have an effect until early to mid-2026. From now until then, every dip, every stop, and every moment of fear is just a setup for the wave that's already coming. You know what will happen next if you know about market cycles? There is fear, confusion, and denial at first, but then momentum builds, resistance breaks, and people who are selling at support are now chasing at new highs. That's why the smart money doesn't mind the short-term changes we're seeing. They are accepting it. It's being used. There's a move coming up that almost everyone else will miss until it's too late. Do not forget that this is not only about crypto, it has to do with the bigger change in money. Rates are going down, dollar value is going down, tech borrowing is through the roof. Innovation is speeding up. Settlement systems around the world are changing. XRP is where it all comes together. There's no chance in that. That's how it works. Take a moment to understand what's really going on. When you see XRP retesting GO256, Bitcoin shaking after an options expiration, or scary news, it's not falling apart. It's building up. It's not the end. The next step has begun. People who know this, who are patient enough to hold on through changes, are the ones who know that history doesn't repeat itself, but it rhymes. When the dust settles, they're the ones who win. And now for the fact that most people don't want to hear. There is no way for the market to make everyone rich. People who are restless will get richer, and people who don't know much will get more information. There is proof for this in every turn. The noise is everywhere right now. The news is full of stories about instability, stores are freaking out about drops, and people on social media are calling for disaster. It's very clear what's going on when you take away the noise and only look at the facts. Institutional buildup is what we have. There are supplies of cash from the Fed. We have tech borrowing that is the same as it was before 2021. And we have one of the most useful crypto assets that is sitting at a level that has never been seen before. XRP is that thing. Take a look at this. As a digital currency, XRP has been through lawsuits, regulatory uncertainty, delistings, and some of the strictest scrutiny possible. However, it is still one of the biggest players in the market, with real users supporting it, while hundreds of other projects have died out and are no longer relevant. Resilience is important, and when there is a lot of cash available, resilience and usefulness are what do best. Let's zoom in on the macro one more time, since that's where everything starts and ends. It's not a small thing that the Fed cut rates. It is the most important thing that will happen next. Rate cuts make it cheaper to borrow money. Businesses use the cheap money to build. Bonds don't give investors a return, so they look for riskier investments. The perfect storm is caused by that change in behavior. Things like XRP don't just float in that storm, they rocket. As an example, let's look at the bond market. 10-year U.S. Treasury yields were attracting buyers because they seemed like a safe bet. But now that yields are going down and inflation is still high, keeping bonds means losing money. This is why institutions are looking in other places. These are the hedges: stocks, commodities, and crypto. These are the plays for growth. This is where the cash goes when safety is no longer worth it. And crypto doesn't just do well because it's risky, because it's liquid, global, and available 24 hours a day, 7 days a week. It's useful. Stocks close every night, but crypto is open all the time. Crypto gives businesses a way to move quickly when they need to. XRP gives you an even bigger advantage: how fast the deal happens. Every day, trillions of dollars cross countries. That means that every second you save billions of dollars. That's why XRP isn't just another coin, it's a link. Volatility today is just the price you pay to get in on tomorrow's gain. It's not a sign of weakness when XRP tries 0.256 and bounces back. It means that sellers are stepping in where value is. Each repeat makes the base stronger. Every bounce shows how strong it is. When resistance is broken, a wave of capital that has been sitting on the sidelines comes rushing in. Think about how the average investor thinks and feels. They sell when prices are low because they are scared. They buy when prices are low because they want to win. That's the exact way they get caught. But institutions do the opposite. They build up when people are scared. During joy, they spread. That's how money moves around. And for the time being, fear is still running most of shopping. That means there is still chance for those who can get past their fears. Now, if we look ahead 12 to 18 months, everything fits together perfectly. Since the Fed is lowering rates this year, we know that it will take between 3 and 6 months for that extra money to really start to flow into the markets. In other words, the real effect will be felt in early 2026. On top of that, the cycles for institutional acceptance of blockchain and cross-border settlement are already well underway. You have a collision that is different from anything we've seen before, but this cycle is even bigger than the one in 2021 because of this. Useful. In 2021, the run was mostly caused by rumors, ICOs, NFTs, and hype projects all went up quickly and then fell just as quickly. This time, it's not just jokes that are getting attention. They are things that can be used in the real world. A central bank is testing XRP as a payment method for businesses, as well as an international settlement solution. That is not a hype story. That's the building blocks. And infrastructure is what lasts after the hype dies down. Also, don't forget that rules are changing. Once trying to keep crypto out of sight, governments and agencies are now building ways to include it. That clarity doesn't just get rid of doubt. It calls for money, a lot of money. The kind of money that changes markets on a huge scale that most small buyers can't even imagine. That's the money that's interested in XRP right now. What does that mean for today? We deal with instability in the short term. We are riding the wave of new money coming in over the next few months. Long-term XRP isn't just a trade, it's a part of the world's infrastructure. We are at the center of a financial revolution. There are chances in each time frame, and all of them together make the best plan we've seen in years. Let's break this down into a simple framework. Complicated ideas are what confuse people, while clear ideas are what convince them. Start with step 1. Learn about the macro. Rate drops, a weak dollar, and buying by institutions. That is the background. Step 2. Know how the cycle works. It takes time for markets to become liquid, and each year after that, they're higher. That beat is the rhythm. 3. Do it. Know what the value is. XRP is strong, widely used, and adopted. That's the edge. 4. Do it. Understand how people feel. Retailers are scared, but organizations are buying. That is the sign. You can see the whole picture when you put those steps together. And when you look at the big picture, instability stops looking like a threat and starts looking like a chance. That's why I keep making the same point. People who don't freak out at drops or chase at peaks aren't likely to win. People who know where the cycle is, align themselves with it, and let time do the rest. The way forward for XRP is shaped not only by speculating, but also by integration. It is this mix that makes this cycle unique. Also, let's talk about one more important point. Global flow of money. The US isn't the only country involved. Money is moving around the world between Europe, Asia, and Latin America. Emerging markets look for other currencies when the dollar gets weak. If you need to settle cross-border payments faster and cheaper, then solutions like XRP are not only appealing, they're required. This isn't just about one country's choice anymore, about a change in the world. That's why XRP has been tried out in hallways around the world. It is already being set up with banking tests in Europe and remittances in Asia. Most small investors fight about charts on social media, but behind the scenes, the real work is being done. When all of those plans are put into action, it won't be quiet anymore. Where are we going now? Institutional positioning, macro liquidity, and blockchain usage are all coming together. A window through which opportunity shines for the few who can see it while fear blocks out the rest. A time frame in which XRP is not only ready to join, but also to lead. Things won't go smoothly for the next 12 to 24 months. There will be ups and downs, retests, shakeouts, and fake breakouts. Still, the main trend will be easy to see through all of that. Up in liquidity, up in adoption, and up in usefulness. And these three things don't just make prices go up right away. They push them to do better. This is such an important moment because of this. Right now, the base is being built. There is a bigger signal behind the moves you see today, like the tests of support and resistance and the expirations of options, along with the bright flashing of the bigger signal.